What is going on out there, good people? It is your boy Look Around with LMD Trading. Coming at you today, a little under the weather, with another day of review. Today, what is this? January 21st, Friday. It is a Green Day review today. Seem to had a stretch this week of a red huge day, then a green day, then a red huge day, and then a green day. And that's what we did today. Little day of redemption. That's what I call this one, a day of redemption. Actually, took some pretty good trades today. I think we only traded two different stocks. Maybe just one stock. No, we took two. Took two different trades. Yesterday we overtraded and underachieved. Took double-digit trades. Today we took 7 trades. So we took one trade more than our usual sweet spot of 4 to 6 trades. But we'll go ahead, get Trader View pulled up. We will review them, kind of talk through them in Trader View, and then we will look at them on the charts. And we will be up out of here because my throat is killing me. I don't want to be talking too long. Let's go ahead and get Trader View pulled up. Be right back. All right, we are back and we got Trader View pulled up. And the first thing I notice is exactly what I said. We started the week off with a nice day, or actually I won't say the week, but this little chart here. Nice day, garbage day. Decent day, garbage day. And then today we redeemed ourselves and we finished the week out on a green day. I'm not sure if we finished the week out green. We may go and take a look at that after we finish this, but definitely finished the day green, which was good. So we're reviewing January 21st, 2022, 21 days into the new year. We took 7 trades, volume of 22. We made 196 today. Made 196 with one red trade. You'll look at this red trade and you'll see the amount and be like, okay, that's like way more than your risk level. But there was somewhat of a method to the madness on that trade. So we'll go through and review these each individually. I'm not going to waste no time kind of talking about them. We'll talk about them as we're reviewing them. So I'm going to go ahead and get the review screen pulled up and we're going to rock and roll. All right. He's not playing today. Let's jump right on up into it. We traded 2 different stocks today. Took a trade on Apple off the open. Played a put on this. Actually, could have played a call, which we missed. And we'll take a look at it on the chart and see. We're not going to be able to see it. Oh. Not going to be able to see it. Let me do something real quick. I'm going to see if I can pull it up. I think it was on the 2 minute. Where are we going to? Oh, is it here? No. Gonna make me have to do it the long way. Boom, boom. We're gonna show extended. And on my daily, or on my, not my daily, what am I trying to say? On my battle station, what I like to call my battle station, Pre-market is turned on, but when we're reviewing, I have it turned off. But I'm gonna turn it on here just because. So this is what Apple was doing in the pre-market. And then look at what Apple did right as the market was about to open. It threw off this nice wide range green candle, followed by a nice little short candle, pretty much in the upper half of the wide range candle, bottom and tail. Pre-market, so volume is not really going to be that big, but we still got this nice wide range followed by this little narrow resting. It's a nice little 3-bar play. So market opened here, stock pushed up, and it broke it. Now, did it go $2, which is what we like to see? Nah, it didn't go $2. It went $1. Went right at $1. So would have made 25 bucks. We would have made 1R on the trade, but would have been a nice scalp. Would have been a nice little pop scalp. So we didn't catch that. But what we ended up doing was buying a put. We bought a put at 9:32. 30 seconds. Right about in the middle of that candle. So we bought a put right there. No pattern. We bought that on 0 pattern. And I am a pattern trader. So I should be entering trades on a pattern. So first trade we got in, no pattern. We got in it only because this was kind of extended and we said that it needed to pull back to about right there. So we got in this at 9:32 and the stock scared us out of it at 9:33. We got out on the next candle. And on the 2-minute chart, we would have still been in this candle. We got scared out of this trade here. And we made $9. This thing went, so we got in at 165. Could have played it back down. We would have got 1R coming back down to here. And we only had one contract too. I'm looking at that right now. Paid 88 cents for this contract, $88. I will say that I love option expiration date. My home phone never rings and it wants to ring while I'm making this video. But you'll say, look around, why do you like option expiration date? Option expiration date, you can buy option contracts dirt cheap and still make pretty much the same money you would make had you paid premium dollar for it. So this one we paid $88. We sold it for $97. We made $9. This thing on this move here, it went $2. That was a $2 move from there to there. Came back and tested this area right here from the pre-market. So that was our first trade of the day. We got in it as a scalp play. That's all it was. That's why we got in off of no pattern. But that's not a part of our trading plan. Our trading plan says that we need to look for patterns. So it was not a good trade, even though it made money. And even had we rode this down here and would have hit a target, still wouldn't have been a good trade because we're pattern traders and that wasn't a pattern. So the next trade that we took was the SPY. We stayed on the SPY all day long. The SPY was just horrendous from yesterday. Um, so I wasn't really anticipating that I would be playing the SPY too much, but we did, and we made decent money on it. So definitely can't be mad. But first play on the SPY or puts. We got in these at 951. So we would have got in these right here. We look at this from the open, came up, pulled back, halfway pullback right there. We got a nice little half pull. Would have liked to have seen this candle been a top and tail. Would have liked to seen this wick on the top side of it. But we got in as it broke this area. And we got out of this trade at 959. We got out of this trade right as it was coming down. And we were looking at this area of what would have been resistance, kind of push this back up. And if you look, came and dropped this tail just about half of that move. So just about half of that move, and it did pull back, but we got out right there for a $22 profit. As you can see, had we stayed in it, it would have pulled back. We would have gave back that 22. We probably would have been about even, and then it would have went on and continued to make its move. But like I say, we don't like to sit in the pullback, so I'm not mad on that one. It was a green trade, and that was our second trade of the day. Go to our third trade. Puts again on the SPY. This one here we got in at 1250. So, oh, I'm sorry. We got in this one at 1012 and 50 seconds. So not 1250. I'm like, I know I didn't take that long to take another trade. So we got in that one at 1012. So we would have been getting in this trade here. Again, not really a good area. Look at it on 5 minute. Would have wanted to have really seen it break this area before, and I guess it may have, but that was a big jump from there. So that really was not a good area to get in. So we see that this did act as resistance, kind of pushed it back up, and then it did finally make its move. And we got out of this at 1021. We got out of this one right here as it was making that move. And from there to there was target. We made $56 on that trade. Right area to get in would have been right here. So we took a risk getting in there, and it just paid. But here would have been the area to get in. Let this consolidate and then get in for the break. And we would have made the same money. This was just anticipating. And most times anticipation will cost you. This one, it just worked out for us. But here would have been the proper place to kind of enter that one. Let it consolidate and then break down. But nonetheless, we hit our target, made 56 on that trade. Next trade was another put. We took this one at 1036. So we got in this one here as it had came back up. So we had this move. Not really a good area. You want to see the sellers step back in and keep this thing going down. This it came here. So if you had a trend line here, it broke the trend. So it broke the downtrend. So this wasn't really a good area. It's not a good area. You're above the VWAP. So it came up, it broke the VWAP. So you know VWAP is going to act as resistance coming back down if you're going to the downside, or it's going to act as support if you're going up. And it acted as support and kept going up. So that one we got out at 9:39:46. 9:39. We got out right there. This had a little more room in it, but at that point, you kind of see that it's coming back and it's going to test this area of the VWAP. And we got out for a $31 gain. So again, not a real good trade, but we made money on it. Not something that you want to get into the habit of, but can't be mad. But I know it's not a habit that you want to have, getting into a trade that you shouldn't be in and still making money. What that'll lead to is saying on the next one, I might be able to squeeze something out of it. Nah, this could have easily came up here and the buyers could have just said, we got this thing, and took off with it. But worked out for us. We made $31, so a little over 1R. And let's see. Next trade we took, SPY again. And this time we played a call. And we got in this trade at 10:45. Let's see where that's at. We would have been getting in right about here. We paid $192 for this call. Bought one contract. And we got out of this at 10:50. So let's go ahead and drop that one. We got out of this one right at 10:50:02 as the candle was forming. So got in here. So this downtrend ended up setting a higher high, higher low, higher high, higher low. So you want to see two of those for the trend change. We got that bouncing off of the VWAP, and we got in as this candle was breaking the high of that candle. So decent little buy setup. Half of this move is about right here. That's about right where it came and tested. So now you're just waiting for candle to break the high of the previous candle. So we broke it here and we got out right there at $53. That was target. That little room right there. So on $192, we made $53. One contract, about 25% on your money. Not bad, not bad. And that was a decent trade there. Trend had changed. We had two higher highs, two higher lows. Decent pullback to about halfway. Coming back to support. Coming back to the VWAP. And it made a move. Short-lived move, but it made a move. And it did kind of, you look over here on the 1 minute, it did go up a little higher, set the high. But $53 trade, decent trade. And we came right back and we bought another call at 11:10. Let's see where we're at here. We bought that one right there. 11:10. We bought that right there. I will ask you, do you think that is a good trade? You looking at it, do you think that is a good trade? Leave a comment. Let me know if you think that right there was a good trade. So this was in a downtrend. It broke the trend. Higher highs, higher lows. Pulled back. Nice pullback. We got in. Came up to here. Kind of just like meandered along. Tested this area. Somewhat half of that move. That's your pullback. If you were going to get in, there would have been the spot. But why would you get in there when you got resistance? So this thing went right to resistance. Definitely not a good area to enter because you're buying right into resistance. This thing is going to come back down. No reason for it to keep going. Catching resistance. So came back down. It's trading in this channel. And when did we get out of this one? This is like a case study right here. We stayed in this trade until the day was over. And before I put the time that we got out, I'm gonna just kind of remember that time. We'll go to the next trade. So the next trade that we took was at 10:48. Here's 10:40. 10:48 is right. Next trade we took, mind you, we're in this trade here on a call. We took this trade here on a put. So in it here, and we're still in this trade. And then we buy a put right here. Now, the one thing that this doesn't show on these charts, but on my battle station, I usually have a little tiny daily chart. I have a little daily chart. I'm going to change this one here to the daily route. Give me 1 second. Up. We need to actually load the daily. Okay. Is that a good one? Let me see. Let's do the hourly. Where is the hourly? What's on the chart? All right. This is still, it's not really a good one. Only because this doesn't show you the 200 moving average. Bear with me 1 second. Let me add. Let me see. Simple moving average. Let me add that real. Change it. Just for this one, I'm going to change it to gold. It's normally blue on all of my charts. Right, that's still not right. This is not working the way I want it to work. That sucks. Oh, I could do it 2 ways. Let me that sucks. That sucks. Let me go to the daily real quick and see where. There we go. That's better. So this is really where the 200 was at. So this kind of gives you a frame of reference. Started buying calls when the stock came down to the 200 moving average because it was going to, I won't say it was, it should bounce off of the 200. So when we started buying calls, we were buying them because they were bouncing off of the 200. As it came back up to the top and we bought this last put, and this was our last trade of the day, we bought it at 10:48. So we bought it here. But up here, actually, let me go back now. No, I'm flip-flopping on y'all, so bear with me. It's a method to the madness. But as you see right here, if you look on the daily, this 50 was about to act as resistance. So when we bought this call, we didn't buy it on a pullback. We didn't buy it on a breakout, and we bought it at the top of resistance. And you had the 50 right above it. So it had no room. That's why this came up here. It set the high of the day. And then this thing just pretty much tanked the rest of the day. So once this got below the VWAP, we purchased this put right here. And it was because this, it came down, made this little move here, and then it broke. So we bought the put here, two contracts. We paid $94 per contract. So we paid, what's that, 188. I was going to say 200, but let's use the right number. We paid 188 for these contracts, and we managed these contracts all day. So we just managed them. And as you can see what the stock did, just came down, kept coming down. Never really came back up. And we got out of these at 1325. 1325. We got out of them. Got out of one of them right there for $144. And then we got out the next one for $145. And we made 101 on those two contracts. So we made more than 50% on those two contracts. And that is why I love buying options on expiration date, because they so cheap. It's so cheap. That same contract, middle of the month, probably would have been $300, which is still not bad because you're still only risking $25 if you take your stop when you're supposed to take it. So even paying $300 is not bad. That's why this strategy is a good small account strategy, because that's still not bad, $300. But $94 for a contract that you can make $50 on, that is not bad on your money. And if this was a Thursday, you get that money right back to trade with if you're trading out of a cash account. So we took that trade, we made $100, and we were still in this trade the entire time. But the thing was, this trade here, we paid $78 for that contract. We paid $78. Or I'm sorry, we paid we paid $78 right there. But we paid $78. So, there we go. So if you look right here, I dropped a line on the volume. This here, that's appreciable volume. This here is just daily trading volume. So we were in that call trade that we paid $78 from here. And the thought on it was, we're going to get at least $100 out of this if this makes this whole move. If we only get $50, we'll sell the put for $50 and we're hedged on the call if this thing turns and goes back against us. So really had no intentions on selling this one. This was just going to act as a hedge once we got into it. But we ended up selling that one for $2 at what time? 3:16. So we sold that one like right there. So basically, right before we sold these, we went on and got out of this call, and we took the entire hit on it, but it was almost like playing a spread. So we're playing the put, and the difference is going to be this one. So this one here, we made $100, but in the grand scheme of things, we made $25 because you got to subtract the 76 from this one. And that's why we just kind of rode that one down. It was like a hedge of protection. If this came down here, buyer stepped in, then we would have got out of the put, and then we would have rode this call back up and got the difference out of it. But we ended up just riding that down. We got 4-1 on our contracts. And then before the market closed, we just sold that one. We could have let it expire worthless, but $2 is $2. 65 cents of it went to the commission. So made $1.35, and it didn't just stay open in the system. So that was our day of trading. Like I said, it's $196. So definitely was a good day. Go ahead and pull up the week. We'll take a look real quick, see what we did. Let's go detailed. Oh, ugly. So on the week, we finished down $6 with an average daily gain or loss of negative $1.50. Average winning trade, $38. A little less than our 2-1. This is what killed us. Average losing trade, $58. Almost 2-1 in the wrong way. Look at that. Winning trades, 15. Losing trades, 10. That's good. We're right there at that 60-40. The problem was the huge losses. So if we would have took the normal $25 losses that we should have been taking, this here was our average. 60-40 is what we average per week, wins to losses. Largest gain, 101. Largest loss, 127. Average hold on a win, 17. Average hold on a loss, 44. Killer. This here should be single digits. That should be single digits. We should be cutting losses and letting wins ride. So flip-flop here, flip-flop there. And we see here, Monday was a holiday. Tuesday, we lost 128. Wednesday, we made 100, so we were still down 28. Thursday, 174. And Friday, 196. So we made that loss up. We didn't make that loss up. We ended up finishing the week down $6. Go ahead and see how we are on the month, and then we'll be getting up out of here. All right, so on the month, we're up $1,500. Average daily gain, 110, right where we want to be. Average winning trade, 46, right about where we want to be. Average loser, $40. That's higher than what we want to be. Wins to losses, 60-40, just about 63-37. That's good. Like I said, you don't have to be right every single time. You just need to be right bigger than your wrongs are. So That's good. We're right there where we want to be. Largest gain, 475. Incredible. Largest loss, 237. Horrible. Average hold time on the wins, 41. Hold them and let them play out. Average time on the losers, 17. Again, that should be single digits. We want to be cutting those quick. Scratches, 20 minutes. Look at that, right about in between. Because these are ones that come back and stop us out after we've moved our stop up. And we only had one of those. We see here Friday has been our most productive day. Thursday has been our least productive day. And then these days here have just been productive. So then look here, our most productive hour is 10 o'clock. As the day goes on longer, both of them red. That's over trading, leading to underachievement. That right there is exactly what I was saying about yesterday. And it shows right here on the calendar, or right here on this chart. I'm sorry. Get out of the trades early, and this is the sweet spot. 9 o'clock. Those are ones that you're getting in right at 9:30, right as the market opens. Once you've let the trades kind of breathe, that's where we've been making our money at. Let that trade breathe for about 30 minutes, establish a trend, and then find a pattern. That's what this shows. So that's the beauty of being able to put your trades in Trader View and can kind of review them. This does work better for stocks, but it still gives you valuable information for option trading. And this here just shows the price performance. So, and I don't really think this is accurate for option trading. I have to look into it a little more and see what it's giving you data for. This here is just showing you intradays. I think we had one trade that we held overnight, made 116 off of it. But not really in the business of holding anything overnight in this particular account. I do trade out of 3 accounts. I kind of break down how I trade out of those accounts. So the first account I trade out of is a margin account, and all 3 accounts is with TD Ameritrade. First account is a margin account. That account I primarily trade mid to large cap stocks that I'm swing trading. Primarily swing trading. Every blue moon, I'll take a day trade out of that account, but usually swing trading. And every blue moon, I might do a small cap, but not too often out of that account. Then the second account that I trade out of is an IRA account. And that account, more so longer swing trades. So I am adjusting the stops, giving them a little extra wiggle room, and then I'll adjust my targets and whatnot accordingly. So let's say I take a trade that has a let's say 50-cent stop. So on a 50-cent stop, I'll buy 100 shares. And if that stock goes against me 50 cents, I'm going to get out of it and stop out for a $50 loss. So what I'll do, instead of buying 50 shares, I'll buy 40 shares and I'll buy 90 shares and I'll keep that same 50-cent stop. And that gives me the wiggle room. So I don't have to mess with my stop, um, because um, the that little extra wiggle room is built into that. And then in that account, I'll also take some small cap day trades. But usually I try to stay away from the small caps um, on day trades and swing trades. Every blue moon I'll take I'll take like a small cap trade. Like I took VXX today in my margin account. Let me see. Yeah, that was trading at about $21.83 today. And I took that as a swing trade, and it is currently up 7.42%. And that's in my margin account. So, and then the third account is the cash account, which is this account here that I trade only options out of. I won't be doing any stock plays out of this account. This is like a almost like an experiment, I guess you can say. Um, just using fairly small account, definitely less than the PDT rule, and just doing option plays daily. Um, like I say, the good thing about options is the money that you spend today, you can spend it again tomorrow in a cash account. Whereas if you were buying stocks, you have to wait 2 days. So that's a little bit of the mindset of my trading strategy. The IRA account that I have, that one I'm usually buying and trying to hold for a decent amount of time. So that's why I kind of give the stop a little extra wiggle room. And I'm actually also trying to get larger gains out of those trades. So usually trying to catch it at the bottom of a move, transitioning on the daily chart, and just trying to ride it out. Riding in those stock trades, I'm riding through pivots and everything. And then I'm just adjusting my stop appropriately. So as the trade grinds up higher in an uptrend, I'll move my stop up once I've hit certain target levels. I'll start managing it like on a pivot by pivot and moving my stops up at each pivot. Um, and then we just play it that way. And like I said, VXX we're in right now, and come Monday, I'll be adjusting my stop up on that one. Cause that's a good trade. Go ahead, pull that chart up real quick, and then I'm gonna get up out of here. What time is it? Let's see. Put the daily right here. There we go. So as you can see, this one was up here, kind of came, bounced down, came, bounced down, came, and it's in a little transition right there. It still hadn't established a higher high, but it kind of double bottomed right there. Didn't want to get in it on this double bottom, but we did get in it right here. Like I said, we're up 7% right now on that trade. First area of profit that we're going to try to hit is right here. And actually, this started off as it was going to be like an intraday swing. So this was our first area. We hit our first area. I was going to pull half of the position out, but this thing was just so strong. It's like, let's just hold it to Monday and let's see what it does. So this was going to be the first area, pull half, capture that profit, let the next half ride up to here, and then pull another half. So now we're pulling half of a half, and then maybe seeing if that other one would ride up. But as I look at this is a little extended. So we probably should have went on and took that half today, because that should pull back to right there. We want to see a nice pullback and then can buy the pullback. Let that pull back and then can add to the position. And that's why these same patterns work regardless of if you're looking at a 2-minute chart, a 5-minute chart, the daily chart. Up here we got the hourly chart. And as you can see, you saw me getting in here on this daily chart, but this is what we were getting in on the hourly chart. So this was pre-market. It opened, broke that area. We were going to have our stop set at about half of this move. So we share sized appropriately. And then this right here has gone over 2-to-1 on where our stop was at. And if you look, so it closed right here, and this thing is still going higher, or it went higher. The market is now closed. It's 9:16 here on the East Coast. But after hours, this thing still was going. It closed at 23.23 and it closed at 23.50. So it made a 25-cent move right there. So even if you had 100 shares, that made a $25 move just in the after hours. So we'll be looking at this one Monday to see what it does. We may go ahead and get out of that half position. Hopefully we won't give back. Hopefully we won't give back any gains. But got an area of support here. So hopefully if this does pull back, it might catch that support and just kind of consolidate, which is another price correction. It can consolidate and not give back any gains, or it can go ahead and pull back. We don't really want to see that pullback, but we'll go ahead and cut this one off. A little over the 30 minutes that I like to keep them at, but I think it was fairly constructive. If you haven't liked the video, definitely would appreciate it. If you're not a sub, definitely would love to have you on board. As always, if you didn't like it, go ahead, give it a thumbs down. But if you do, please just leave some constructive criticism in the comment section. And I'm about to make me some green tea with some honey and some lemon and call it a night. I hope y'all have a good weekend and be ready to take on this market again on Monday. Peace.